Welcome back everyone to another episode on Ang's channel today. This is the S&P 500 index, and you can actually observe the price of the movement has been going up ever since. So basically, if you were to buy, for example, 10 years ago, let's say around 2015, you'll be able to have a return significantly higher, which is going to be 240%. So throughout the years, the S&P 500 will be able to outperform the market with somewhat annualized return of 8 to 10% if you just search online and so on. There are ups and downs, for example, the COVID crash, the bear market on 2022, and then the recent tariff threats and so on. Does it mean that just buying S&P 500, as I mentioned previously in our lazy investment video, does just buying S&P 500 a great investment opportunity? It is actually a good, especially you're using the CA method, whereby it's proven by a lot of people. But me personally, myself, I prefer to buy individual stocks at cheaper price and hold it in the long run. Just hold those very strong company with strong economic moats, as well as great revenue and great net income. So this is just the index, but if you were to buy any ETFs, you'll be this is the previous ETF that I bought, which is going to be VU, which also reflects the price of the S&P 500 index, and this is where a lot of people have put their money into this kind of investment. Just put their money, for example, every month they have $500, they just put or buy $500 worth of VU. But me personally, myself, I do think that this index is great enough. It's a good investment return due to the historical results, as you also can observe from the chart over here. But the main important thing over here is to understand VU, or S&P 500, is built out of 500 or more top companies within the US market. So there will be a lot of allocations in different sectors, in different companies, and somewhat most of the price driven is by those large companies, for example Nvidia, which we'll be discussing further on by looking into the details of compositions by the VU ETF, like what is the most or largest composite stocks that they hold, and is the price of the VU driven by all this big tech or this very strong as well as very popular company. So you might ask, yes, it is actually a good investment, whereby I actually bought this previously as my first investment tools, but then I started to realize that within VU, there are more discrete opportunities within it. So I searched into the details, as also mentioned by a lot of internets, whereby yes, you can buy VU if you are very lazy to do research and so on. Basically, VU will help you diversify eventually, so we'll be able to gain consistent returns from the market. So let's look at the VU. If you buy the VU ETF, despite with the benefits of just diversify your portfolios, because it actually built up of 500 or more companies, you'll be able to have lower management fees by whatever brokers or whatever banks or institution that manage this ETF. The expense ratio is 0.03%, which is significantly low. I don't think you can actually feel the expenses being spent for the management as well as for the portfolio managing for the VU. So the price for the expenses to manage the ETF is significantly lower compared to others as mentioned by their website, which is actually a great deal if you are trying to just invest into the market consistently. VU is actually one of the most top opportunities or top investment tools used by a lot of people, and also by me previously. But right now, I actually go into details whereby, so I started to look into fundamental strong companies, whereby because of VU consists of 500 companies, so I just want to remove all the other companies whereby it's underperformed or does not have significantly high strong economic mode score compared to the others such as Nvidia and Google. So basically you can observe their exposure. They have different exposure, for example 10% on the community service, consumer discretionary at 10% and so on. And one of the highest is going to be the 34% on the informational technology, which is IT. And second of all is going to be the 13%, which is on financial, since financial is one of the necessity of around the world, which requires a lot of transactions and so on. So here is the holding details. You can actually see it on the equity, whereby this is where the stocks or the company that the VOO ETF is consist of. So the first largest is going to be Nvidia at 7%. Second of all is Apple, Microsoft, Amazon, Google, FVGO, Google, Meta. So basically you can actually see Magnificent 7 within the VOO itself. This way, they will be able to buy different companies, which most of them are great with high economic mode scores, great returns, and it's just to diversify. Well, you might ask, well, since I know Nvidia or, for example, Google is a very great company, why don't I just buy one of them and focus on a single company? So this is where diversification comes into help, whereby it's not always that despite that company is a strong, bright company, but at some moment of time, maybe this company has some situation whereby they face fine or they have issues in terms of their demand and supply chain. So at that moment of time, this company may face a lot of pressure. So the price of the stock may have small corrections or pullbacks. But at that moment of time, maybe Nvidia has a very strong news in terms of their profits, in terms of the quarter earnings. So that's a driver towards their strong price action. So it's important that you diversify your portfolios not only just on different sectors, but also to diversify it with multiple strong companies that will be able to consistently provide profits as if you are individually focusing on each of them. So this is to not only to help you diversify, but also to help you to deal with issues whereby if, for example, during the tariff threats or after the threats is settled and the situation kind of eased down a little bit, most of the Magnificent 7 stocks at Nvidia, Microsoft, Google, they all surge up, providing 10%, 20% returns, whereas Apple is facing situation whereby it still underperforms or it's just at like up maybe 1 to 2% only. So this is where diversification helps you in order to diversify your portfolios and help it to deal with situations that each company have. So you can basically see there are many pages, and most of the company is some of the company that you are familiar of, as well as some of the company that we have gone through. For example, Visa, JP Morgan, Palantir, Netflix, which are all very strong companies or well-known companies, which is mostly used by us and so on. However, you can actually observe some of them are in very small positions. So my idea is to always hold or to buy something that S&P 500 has a large holdings on. So before just go directly into the decision whereby, oh, this is the highest percentage Nvidia, so I just buy it. But instead, I really need to know what is the highest percentage, which for example, 77.75% is Nvidia. So what is Nvidia? I'll go through their economic mode scores, their revenue, their net income, their debt situation, as well as ROE, ROIC. And finally, I will be deciding whether or not if I were to buy this company. And also remember to always buy at a cheaper price. Don't buy at the all-time high, because in my experience is that buying at all-time high is very risky, despite it might have a chance whereby it will still continue to going up. But then what if it drops back down? It has a small corrections. You won't be able to have that safe margins or a lot of opportunities in order to earn greater percentage in terms of this company. So the idea is very simple. It's just to understand what are the companies and why VOO or why S&P 500 include this kind of companies within their index, within their ETFs, which eventually makes them one of the great return ETF over the long run, over the 10 years, with consistent profits, beating most institutional traders or individual investments and so on. So it's also important that you know what you want and what is your need. Because if you are that kind of person that really don't want to put a lot of time into investigating or to research, well, VOO may have the tools to help you with your investment opportunity, but this is not financial advice. Please make your own decisions based on your research and due diligence, and just make good use of your money. So don't just follow any suggestion, because this is not a financial advice video. So I think that's all for today's video. And this is the reason behind me selling my VOO previously in the early stage. And this is during the first time of my investment strategy. But then I just sold VOO and start buying individual stocks which are very strong, high returns, and hold long term which will be able to provide similar results as the wool itself. So I guess that is all for today's video. I hope this helps, and if you like the video, please subscribe, click the thumbs up, and share this with your friend. I hope we'll see you in the next video. Goodbye.